Good morning, everyone. It's Alex here, bringing you the Week 7 Term 2 Economics Society's market recap. Please sit back and enjoy as we recap some of the key economic events of the week. This week's market mover is Pilbara Minerals, which increased by 2.62% in the past week and 6.82% this Friday. The spike in share price of the battery-making ingredient comes as lithium regains national attention. Pilbara Minerals still has a long way to climb though, given that it's currently trading at 20% lower than it did at the end of May. But on the bright side, share price has increased by almost 60% this past financial year. This growth is attributed to positive broker coverage and strong auction results on the battery material exchange. This week's market loser is GUD Holdings Limited. GUD is a pump equipment company which conducts business through manufacturing, importing and distributing pumps and water pressure systems for spas and pools. The 24.13% decline in share price over the past month is attributed to investor behaviour following a warning of a supply chain issue. This caused GUD's operating earnings to be revised downwards by 10%, causing investors to flee the market. Elon Musk's unprecedented offer to purchase Twitter is under fire as Musk claims he lacks the information to evaluate the volume of Twitter's spam accounts and its prospectus more broadly. Just this morning, Musk has terminated the $64 billion deal. The original terms of the deal required Musk to pay $1 billion to forfeit the agreement. However, he may be stopped from rejecting the merger if his reasons are not founded on the company's fundamental business. This is because Musk originally waived his right to a closer investigation of Twitter's finances. Interestingly, by drawing attention to the bots on Twitter, Musk's commentary has plunged Twitter's stock price by 6% as of late. The Twitter board seeks to pursue legal action in the Delaware Court of Chancery. The Reserve Bank of Australia has lifted the cash rate by 50 basis points. The cash rate is now at 1.35%, up from 0.85% last month. Dr. Philip Lowe's July statement cited the usual suspects for the RBA's response to high inflation. These include COVID-related supply chain disruptions, the war in Ukraine, as well as a tighter domestic labour market. A shock to Japan. The Asian share market has suffered after reports of Japan's longest-serving former Prime Minister Shinzo Abe's assassination during an election speech this week. The Japanese Nikkei index grew at a slower pace of 0.3%, down from its former peak of 1.5%. The Japanese yen rose by 0.5% against the dollar this Friday as investors fled the Japanese capital markets for safer currencies. Essentially, by selling Japanese assets, investors reduced demand for the currency, causing it to depreciate. Amidst concerns that the passing of a loose monetary policy advocate will tighten markets, economists predict that Abe's passing is likely a short-term external shock to financial markets. That's all on this week's UNSW EcoSoc's market recap. I hope you enjoyed the events of the week, and please look out for our key events on Facebook this week. We look forward to seeing you for a new market recap next week. That's all. Goodbye.